Business operating agreements. Legal disclaimer we put at the beginning of all of our presentations. This information is for general and educational use only, not intended to substitute for professional, legal, or clinical advice. We strive to keep our information as accurate and timely, but make no promises and guarantees it works for your local, unique situation. Course objectives, the students will be able to verbalize exactly what is a business operating agreement. They'll be able to discuss the different types of operating agreements, particularly limited liability company operating agreements, since that's what most midwives will be using for their companies. Students will be able to verbalize what is included in a LLC operating agreement, particularly for midwives, and they'll be able to verbalize affordable ways to create an LLC operating agreement. So this topic is really important because when you're structuring your limited liability company or any business structure that you're doing with a partner or just in general on your own, you need to be able to understand what are the rules, what are the filing requirements, what do you need to do to get started, what do you need to do to maintain it, and there's legal binding agreements, and then there's things to improve the operating potential of the business, just the day-to-day flow of how the business partnership and the operations of the company actually run. You need to have that in writing. You need to have expectations, you need to have accountability, you need to have profit sharing, you need to have exit strategies. There's quite a few things that are essential to have in an So let's start at the basics. What exactly is a business operating agreement? So these are a set of guidelines, particularly for a limited liability company. There are different partnership arrangements with S corps and other corporation structures. You change it slightly, but we're going to focus mostly on an LLC because that's what most of our followers will be doing with their. So you want to have these bylaws for your corporation. They're going to cover the name, the purpose, the address, the members, their role. Are there multiple members? How do members buy in and out of the practice? What are their roles and responsibilities? How's the profit sharing? How are you going to have, if there's disputes, how are you going to resolve them? There's a lot of details an operating agreement will. When it comes to an LLC, there's certain things that that corporation has to have in there to create an operating agreement. You have to identify the company, the status of the ownership, the state, the address, the duties, the structural layout, the voting rights. Are there stocks, which would be with an S corporation versus an LLC? How are they dispersed? How are they purchased? If you want to sell your rights as owner, you want to buy in someone else to ownership, what are the steps of that? It's a legal contract between you and the other members of the LLC, and what is the benefit to each person to be part of this agreement. So here we're going to go over some essential things that all LLC operating agreements need to have. You need to have the business address, the articles of organization. You need to have the legal name, if there's any doing business name, management structure, legal counsel, if you have an arbitrary arrangement with some sort of neutral party, you need to identify who's the registering agent, who's the managing member, what each person's role is in this. The tax purposes, LLCs enjoy a single layer taxation, so profit sharing is a little bit easier. The members will split their profits and then they'll file it on their own taxes, versus an S corporation, the company is taxed, and then, so like a C corporation, the stock shares, they're going to be a double layer taxation. So you just have to explain how the income expenses are being dispersed. It's good to have an accountant, so you have a third party disbursement, a neutral party, help with conflict of interest, versus one of the members always doing the accounting and financing. That's when you start getting in the risk of embezzlement and funds not being tracked as accurately as they should. So there's certain incentives when you elect an LLC status. You have to think about if it's a C corporation, an S corporation. If you're starting to get outside of a single member LLC, it's directly under your taxes. But once you get into the partnerships, you have to decide which direction you're filing the business taxes and structuring it and who's responsible for that. You need to be able to lay out the procedure. How often are you going to audit your finances, keep up with taxes, meet with the accountant, meet with the lawyers, meet with your business Business Consultant, and keep up with the tax classifications, especially if you're going to the direction of an S corporation. There's going to be a breakdown of dividends with stocks on top of profit income. So there's a certain structure you want to do that's tax advantaged, and we talk about that in other sections. We're just going to focus on the operating agreement at this time. So definitely need the members' information, their roles, their legal name, their phone number, their address, the expectations. If they're getting compensated, how are they getting compensated? If they don't follow what their membership expectations are, what is the step-by-step plan to resolve that issue so that there isn't any emotions and biases? Because I hear it too many times where midwives and healthcare practitioners go into business together, they don't have an operating agreement, all of a sudden one gets sick, all of a sudden one is supposed to be doing XYZ on the list of running the business versus doing the midwifery forefront care, and then all of a sudden one isn't doing what they're supposed to and that other business owner is doing double the work, but then they're getting the same amount of pay, and then that other person is cutting down their hours, cutting down their responsibility, but they're still getting their same compensation because you didn't have an operating agreement. You didn't have anything written in stone. All you had was we were equal partners, 50-50, 49-51. But because you didn't break down specifically the job description and what are you going to do if someone doesn't uphold their side of it, there's nothing in legal standing that you can cut down on their pay. You can hire someone and take some of their profits to do that. You don't have anything written. Management structure, member managed LLC, manager managed LLC. It has to do with the number, the size. Are you having agents running the company on your behalf, or are you directly running the company? So it just has to do with the indication of your management structure. So you want to talk in the operating agreement, your voting rights, if there's a big decision to be made, especially when there's even number of owners, members, partners. Odd is a little easier because you can tip the scale of a decision. So if you have an even number or an even amount of rights of ownership, so it gets into that tricky spot with 50-50. When you have three-way ownership, it's 33, 33, 34. So then someone can always tip the scale a little bit more. You need to have an arbitration facilitation set up to resolve those issues. If you're getting 50-50, you're getting half the members want to go one direction and the other half of the members want to go another direction. You have to have a step-by-step plan for how you're going to resolve those conflicts to move forward. A liability statement, it's different. There's a distinction between the company and the individual members when it comes to liability. The stakeholders, if you are choosing to own, especially if it's an S corporation, you're going to own some of the stocks, but then maybe you're going to have outside public members and there's certain voting times. It just depends on how complex you want to get things, but you need to have legal expectations in writing about responsibilities and who is ultimately responsible for the risk of the operations. Especially with stockholders. I mean, if they have a tiny part and they're investing and profit sharing and they get minor decision making, and you're the midwife and you're making all the day-to-day decisions and clinical care, we have to put into there some layers of protection for the stockholders, the people that aren't part of some of the risk of your business. There's different ways to characterize the structure. There's tax benefits, there's regulatory, and every state is different. So I'm not going to go into details. This is great with a lawyer, templates in your state. There's a lot of companies like LegalZoom and resources out there that can help you get started. There's additional provisions, especially with midwives, death and disability. We're very dependent on our contributions to a company. If we're sharing call together and all of a sudden you slip and fall and you can't do that anymore, there's going to be some challenges between the partnerships of you getting profit sharing when the other person is on call all the time now. Other provisional clauses will have to do with if someone wants to buy in, if one of the members wants to leave, disputes between the members, if there's opportunities to edit and update the operating agreements based on relationship trends, based on needs of the business. You definitely want to have some legal clauses like a severability provision, which allows the agreement to still be intact if one part of it is contradictory to state and federal laws. things change with laws. You may create this agreement and then a couple years from now there's a contradictory law, so you want this agreement to still be valid. There's enforceable ways to create an LLC, affordable ways to create an LLC operating agreement. Too many people get expensive lawyers and it adds up to thousands of dollars very quickly. You can do it yourself. There's a lot of resources out there, LegalZone, different things, but I always tell people take the templates and then get a stamp of approval from a lawyer and make sure that there's no clauses and trends and things for your unique situation that should be in there. I think too many times healthcare practitioners and business owners as a whole are very reactive versus proactive when it comes to issues and problems. So pay a little bit of money for the professionals, but get maybe 90% of it done yourself with a template. We've got resources on our website to help with that as well. There's interactive services. We've already talked about Rocket Lawyer, LegalZoom. You can work directly with one of their lawyers. You can hire a local lawyer. You can just download the interactive templates. There's a lot of just automated systems to help you get that agreement started, and then you and your partner can work out the details of what that agreement looks like. Some of the LLCs, depending on the state, have unique situations. So I don't want to make a blank slate, just this is how you do things. I just can't stress enough, find a local expert. It's good to have part of your mastermind team as your business anyways, to have a good lawyer on your team that you can go to if you have issues and problems versus you're trying to recruit one when the issue and problem is already. The cost of the agreement can go as little as $40 to hundreds to thousands of dollars, depending on how complex your business is and how customized you want it to be. Just as an overall conclusion, LLC operating agreements should outline very specific aspects of your relationship. How is the day-to-day, short-term, long-term operation of your business going to go between the members, the stockholders, the partners of the organization? So you have something to go to when the emotions aren't high. If all of a sudden one person's not doing what they say verbally, you can go to the agreement and say, look, you agreed to work full-time, you agreed to work on this, this, and this. You're not doing it. We both agreed before the business started. Your pay would be cut in half. We would outsource to an accountant, a financial planner, someone to do this aspect, to be the clinical director, because you're also not running that aspect of it. And then it's cut from your profit sharing because we have to pay for that expense of the person you were going to do when you hired on. We have it in writing. There's no emotions, because what tends to happen is one person is favored over the other and emotions get high if there's nothing in writing. There's usually an unfair advantage to one person over another when a disability, when a challenge comes, they need to move, they need to go, they want to go a different direction with the company than somebody else. You get into this stalemate where a lot of companies just dissolve versus they merge, they adapt, they evolve to the times because there's agreements and steps in place to handle that.